Today's video is on ZIM. It has a large dividend, and on this channel we focus on dividends here. I earn over 100,000 a year in dividends, and ZIM was at one point a large contributor to my dividends. As you can see by my dividends, it's also gone up slightly despite the Tesla cut. And that's because we got the dividend drips in Cornerstone today, which I'll show you at the end of the video if you stick around. So also I want to show you performance and value. You know, we run a margin strategy here. We use a little bit of debt to get our income as high as it is. And yet we're still up 19% for the year. Dow's up 2, SP's up 7, NASDAQ's up 16. Also with IAP's fallout that it's had recently, we're still up 19% for the year. IAP, we added to shares today, it down 10%. It has since come back off those lows slightly, and it also reported news after hours that it's going to defend its dividends. So that's an interesting stock if people want to leave comments in the section below about that company. The dividend yield is 20% plus down here, so it's worth commenting on. Also, our shorts did really well today. Our SPY put was up 46%. So the puts are hanging in there pretty well. You know, if you look at what we lost today in the market, we lost 3,000, but that's 0.47%. 0.47%, the Dow is down 0.8, the NASDAQ's down 0.49, and the SP was down 0.7. So we were pretty much in line with the indices. That's what you want to see. This loss came from selling DPST, our regional bank ETF. I decided to dump that because the news just keeps getting worse out of regional banks. We're going to control banks through our sold puts and FAS. So without further ado, one more thing. Our margin debt's $245,000 right now, but I'm okay with that since my available withdrawal is $123,000. So anytime that's at zero, I'm in a margin call, but I like to be comfortably out of margin calls by keeping a cushion on at all times, $100,000 cushion. So we're over 100,000 in cushion from a margin call. And again, we're earning these dividends of 100,000 per year. So that will pay back our margin debt in less than 3 years. Okay, so back to ZIM. As you can see in my portfolio, I own a small amount of shares of GOGL, GOGL. It's also a shipping company, and it has a rather large dividend. It has about a 9% dividend. The reason why I'm in GOGL as opposed to ZIM is because if you look at the tax rate for ZIM, you'll find it's overwhelmingly consistent with about 25%. That's what I'm finding. It has a double taxation. I can't look into the specifics of each article and show you for the video. That'll be too boring to skim through all the details, but just look at the headlines. ZIM 25%, US dividends are taxed at 15%, but ZIM is 25%. So that's what deterred me from ZIM's stock last year when I was in it. I was in both ZIM and GOGL, and I ultimately put all my money in GOGL when shipping was doing so well, because both companies had large dividends, but GOGL didn't have the taxation issue. Just know one thing, and that's these two companies are in shipping, and shipping is a volatile sector. So as long as one of the companies is paying a higher dividend than the other, and it seems like ZIM is done paying its dividends, its large dividends, those days are behind it. If you read the articles on Seeking Alpha, they seem to have given up on the stock, and it's still going to pay somewhat of a dividend, but on the days of the huge dividends are behind it. Maybe it'll have a special dividend soon, but people aren't counting on it. So I don't want hope to be an investment thesis. And also, again, that tax rate issue is a problem for me. Look into that. Maybe GOGL has the same tax rate, but I don't think it does. If it does, I'm still going to own one of them anyway, because the dividends in the sector are so juicy. It's just that I'm going to always keep a small amount in them since they're highly volatile sectors. So GOGL, as you can see here, we only have $500 in GOGL. Whereas all the other higher quality names that we have, like Cornerstone and Jeppy, we keep a considerable amount of money in those, much more than the shipping. Jeppy and RLD, we have 15,000 in, for example. In Cornerstone, we have almost 400,000 in. But that's because they're high quality. And Cornerstone, as I was alluding to before, its drip came in today. So 5.2. If you look here, 5.223. We got a 15% gain here on the dividends. So that's why our income went up, because we reinvested our dividends and we got an automatic 15% gain here at the NAV. So that's always nice, and that's why we're outperforming the market, even though IEP has fallen for us and Tesla cut its dividend. That's why our dividends didn't budge much again, and that's why our performance is staying strong. So ZIM, whether I know anything about the company or not, whether you do or not, it doesn't really matter. No one knows anything about stocks at the end of the day. We don't have a crystal ball. All we could do is look at the dividend, and if the dividend is, say, 10%, well, then in 10 years we know that that's cash flow. 10% times 10 years is 100% payback. If the dividend is in question, well, then that model has to get extended out. For GOGL, it seems like the dividend is going to be, around 9% right here for not the foreseeable future, but it's going to vary as the shipping industry varies. Day rates and spot rates on shipping vessels are always extremely volatile, so the dividend will be just as volatile, I imagine. So we keep a small amount of money in GOGL or ZIM, whichever one we're playing, to counteract this volatility issue. And we play GOGL because of the lower tax rate. So I think that'll do it for the video here. Leave questions in the comment section below if I'm wrong on GOGL and ZIM. Again, that's the beauty of dividend investing. It doesn't matter if you're right or wrong. You just let the dividends cash flow the investment, and you keep such a small amount in the riskier names that it doesn't even matter what happens. You just keep collecting the dividends, and if you have to ultimately sell for losses, the losses are small because the position size was small. In the meanwhile, you didn't lose out on let's say a huge gain in the shipping sector. FOMO, that's a problem. And at least you get exposure to that. And shipping is a valuable sector to have exposure to. It serves as industrials. So if you're looking for industrial weighting in your portfolio, that shipping and transports are a form of transport. So they are industrials. So it meets important exposure in our portfolio for that, because we couldn't find any other industrials that had high dividend yields. So that's why I'm in GOGL and shipping, but I'm only having a small amount in it, and that's how our performance is staying strong and beating the market year to date. So I hope you enjoyed this video on ZIM. Leave comments in the section below if there are any more videos you want me to cover. Also, if you have any questions on margin and you need help learning about margin, you can email me at any time for my e-guides at aikentodd48@gmail.com. Take care.